In the United States, building credit should be a top priority, even if you don't intend to borrow money for school, a house, or a car payment anytime soon. Good credit is essential for many aspects of your financial life. It can make it easier to get approved for loans and credit cards, lower your interest rates, and even help you get a job or rent an apartment. In this video, we'll explore some of the key benefits of good credit, how you can maintain and improve your credit score, and the key factors that impact your credit score the most. Hello, beautiful people. I am Kendra Conyers, a licensed real estate agent here in the Charlotte metro area. I would love if you could like, subscribe, and tune in every Sunday at 7 p.m. Eastern Standard Time for great information about the real estate market. So first of all, what is credit? Credit refers to a contractual agreement between a lender, like a bank, and a borrower, like you. The borrower is loaned some money and agrees to pay the lender back in total, typically with interest, over an agreed upon time frame. The most common example of this is the credit card, but the same principle holds true when borrowing money to buy a house. When people talk about their credit, like my credit is good or my credit stinks, they're usually referring to their credit history, which is basically a record of their credit usage. Lenders will examine credit history along with several other factors when determining whether to lend you money for a mortgage, car loan, or credit card. Credit history should not be confused with a credit score, which is a numerical representation of your credit history. The most familiar types of credit scores are FICO scores and the Vantage score, which rely on algorithms to calculate how much of a credit risk a borrower will likely be and how likely someone is to pay off their loans on time. If you have a higher credit score, you'll generally receive better terms on the money you borrow, like a lower interest rate or flexible repayment term. One of the most obvious benefits of good credit is that you can make it easier to be approved for loans or credit cards. Lenders and credit card companies use your credit score to determine your credit worthiness, and a good score can make it more likely that you'll be approved for credit. With good credit, you may also qualify for low interest rates, which can save you thousands of dollars over the life of a loan. Another benefit of good credit is that it can help you get a better job, purchase a home, lease a commercial building, or simply rent an apartment. Many employers and landlords check your credit score to determine whether you are a responsible and reliable person. If your score is good, you may be more likely to be considered. How is a credit score determined? Well, maintaining a good credit score is important. It shows the lender that you can be depended upon to repay your loan on schedule. To keep on top of things, it's good to understand what goes into building a credit score. There are three main credit bureaus tracking credit scores in the U.S.: Experian, Equifax, and TransUnion. Not every lender uses all three, but all three use the following criteria when calculating someone's credit score. Here's what credit scores are based on. 35% is based on payment history. This shows whether or not you have a history of making complete payments on time. 30% is based on the debt to credit ratio. This compares how much credit you have available versus how much you're using. 15% is based on the length of your credit history. Have you only had a few months of credit usage that is being tracked, or have you had a decent amount of time over the course of several years? 10% is based on credit mix. For example, what type of credit are you currently using? This could include credit cards, student loans, car loans, and mortgages. 10% is based on new credit accounts. They look back over the past 2 years to see how many times you've applied for new credit. So how can you maintain and improve your credit score? The first step is to simply pay your bills on time. Late payments can have a major impact on your credit score, so it's important to make sure you pay all of your bills on time every month. Additionally, it's important to keep your credit card balances relatively low. High balances can hurt your credit score, so try to pay off your credit card balances in full at the end of each month. You also want to limit the amount of credit you are applying for. Each time you apply for a credit card or credit in general, a hard inquiry will be made on your credit report, which can negatively impact your credit score. Another way to improve your credit score is to use a mix of credits, such as having credit cards, auto loans, mortgages. This demonstrates that you can manage different types of credit responsibly. By paying your bills on time, keeping your credit balances low, limiting the amount of credit you're applying for, using a mixed credit type, you can maintain and improve your credit score over time. The most important factors that impact your credit score are your payment history. This is the most important factor in determining your credit score. Late or missed payments can significantly lower your credit score, while the history of timely payments can boost your credit score. Credit utilization. This refers to how much of your available credit you are using. High credit utilization, using a larger percentage of your available credits, can lower your score, while keeping your balances low can increase your score. Credit history. A longer credit history can help improve your credit score. It demonstrates a track record of responsible credit use. Credit mix. Having a mix of different types of credit on your account will positively impact your score. You definitely want to add real estate to your credit score. That will literally boost your score. Hard inquiries. Every time you apply for credit, a hard inquiry will be made on your credit report, which can negatively impact your score. Credit age. The length of time you have had credit accounts open and active really does matter. The older the account, the better it is for your credit score. It is important to note that these factors are considered as a whole and not just individually to compute the credit score. Additionally, credit score models can vary. The most widely used credit score model is the FICO score, but there are also other models such as Vantage score. To maintain or improve your credit score, it is important to simply pay your bills on time, to keep your credit balances low, limit the amount of credit that you are applying for, and you should review your credit report regularly for errors or fraud and address any issues that you find. Just to recap for you, there are several steps that you can take to increase your credit score over time. Number one, making sure that you don't have any late payments and making sure that everything is either paid on time or that you arrange a payment plan with whomever to ensure that nothing goes into default. And this includes credit cards, student loans, personal loans, or any other bills that are reported to the credit bureaus. Keep your credit card balances low. Make sure that you do not have a maxed out credit card or you are not using more than 30% of your credit limit. A good rule of thumb is to keep balances below 30% of your credit limit. Number three, limit the number of new credit applications. Every time you apply for credit, it creates another inquiry, and having many inquiries will lower your score. So just limit the amount of times that you apply for new credit. Try to only do it when you're really going to move forward with that purchase. Dispute any errors on your credit report. Find errors on your credit report and dispute them with the credit bureau as soon as possible. Be patient. Building good credit takes time, so be patient and don't give up. It may take several months or even a year to improve your credit score. Keep old accounts open. Older credit is a big part of your score, so keep your older accounts open even if you don't use them. Keep $10 or $100 or whatever on your older cards or your older account. Seek professional help. If you're struggling to improve your credit score, consider seeking help from a credit counselor or financial advisor. They can provide guidance and help you come up with a plan to improve your score. Keep an eye on your credit score. Keep track of your credit score regularly so you know where you stand. It's important to note that credit score is a dynamic number and it is affected by a variety of factors, so it may take some time to see improvement. It's also important to note that a credit score is not the only factor that the lenders consider when making lending decisions. Other factors such as income, employment, and debt-to-income ratio are also taken into account. Overall, having good credit can help you achieve your financial goals and make it easier to manage your finances. Thanks so much for watching. Please visit my website at www.kendraconyers.com for more information about me, or email me. My email is kendra@kendraconyers.com if you need assistance in buying a house or selling a house in the Charlotte metro area or the Fayetteville Fort Bragg area.